What's going on, guys? It's your favorite mortgage lender, Del Kwame, Got Mortgages. Happy Monday. Super excited. We have got a lot to talk about. Market has been obviously reacting very well to a lot of the different data readings that we have been getting really consistently. And it's funny, Friday I was waiting for for rates to turn as they usually do with the BLS report, and it didn't happen, right? Which is great to see, because again, that's usually the part that we normally see about the market really retracting from some of the positive gains that generally comes out from ADP report. Tomorrow we'll actually get job opening and labor turnovers, which is weird because it normally comes on the same week with the ADP report and the non-farm payroll with BLS. But nevertheless, let's kind of take a look at how the market has been doing, right? And then we will take a deep dive into some of the things that have really allowed interest rates to continue on a downward trend, right? So, as we could usually see, right, as the stock market takes a hit, generally the mortgage bond market tends to react and actually improve. And you can kind of see here for the last year, interest rates were a little volatile, but I would say for the last 2 months, you can actually see interest rates have been on a significant downward trend, which is great, right? We're almost as high as 7.2% for a conventional loan. We're now as low as 6.7%. Some of our clients are locking even lower than that, which is great. Again, a lot of different signs that we're seeing with the labor market that there's finally a lot of underlying weaknesses, right? So we could take a look here. Again, usually the number one culprit when it comes to these data readings is the BLS report, but it actually showed consistent weaknesses once again of what we were expecting versus what came about, right? So the unemployment rate ticked up to 4.1%. If you guys remember, over the last really 3 months, um, unemployment rate actually ticked down, which is kind of why we have seen interest rates towards, I believe it's 11/1/2024, kind of ticked up, right? In November, December, ticked up, right? And that's really a big reason for it. Happens to be obviously as the unemployment rate went down, less jobs being lost, obviously creating a little bit more confidence in the market, kind of allowing interest rates to tick up, right? So BLS, again, what happened with the non-farm payroll? They added 151,000 jobs in February, really short by almost 20,000 jobs. They're expecting about 170, when the slight decline of what we saw when it comes to 2,000 jobs from the prior month. Unemployment rate ticked up, which is great. Obviously, the market like that when it comes to interest rates. Unfortunate that people are losing their jobs, but it is what it is. Also, an important number for us to take a look at is just although we had just a slight minor miss, right? Hours worked remained at a 15-year low at 34 hours, kind of showing a little bit of how businesses are obviously managing costs. Some employers are, of course, letting go people. Some people are not firing them, but they're necessarily reducing their hours from, say, 40 hours to 30 or 35. Again, overall, what we're starting to see, of course, is a softening in the labor market, which is kind of going to go hand in hand with the Fed's dual mandate for price stability and, of course, maximum employment. Now, job growth on the ADP side, right, private sector, also came in under expectations with only 77 new jobs created. We were expecting 140, close to double decline, right? Again, that's the lowest increase in jobs since July. A lot of stuff obviously comes into effect with trade, transportation, information, healthcare, education, and mining. So again, policies, a lot of uncertainty right now, right? With some of the tariffs and a lot of uncertainty when it comes to consumer spending. We'll get some updates this week on CPI, Consumer Price Index. Are people going to be slowing down on spending, which eventually, of course, could be a factor of layoffs and slowdowns in hiring? Initial jobless claims did drop by 21,000, but continuing jobless claims jumped up by 42,000, clearly showing that if you get let go, you're having a hard time going back and getting another job, right? It unlocked a 3-year high, really showing over 1.8 million since last June. Homeownership. So CoreLogic once again showed another increase in regards to home prices, 3.3% annually. And again, ICE showed about 3%, consistently showing that home prices are expected to still jump up this year, close to about a 4% appreciation level, really relative to what we have in addition be seeing when we start to see a lot of the different data readings, of course, of what we happen. And just like I mentioned this week, we will be receiving data updates on CPI, Consumer Price Index, and the Producer Price Index, and really what's going to be the expectations. If you guys could see here again, we are expecting with the CPI report to come in relatively low at only 0.23%, replacing the prior year's data of zero point 0.4. Remember, like we always say, this data is lagged by 12 months. So as we start seeing updates on the CPI report with the reductions on that, the consistency in regards to the expectations will eventually show. And then an important part is for us to look at is not only do we look for progress on the headline and core, but really how much progress we're making on shelter is the key component here. The Federal Reserve, again, did speak, Fed Chair Powell, on Friday. One of the things that they said is that they will wait and see what is happening when it comes to the labor market and what is happening when it comes to really overall the economy and inflation. They said that if the economy is growing at a solid place, even though Q1 GDP is showing a negative 2%, he expects inflation, he is in Jerome Powell, expects inflation to reach that 2% goal, but it's going to be a bumpy path, right? And of course, we know, like I said, on tariffs, Powell explained that if they spike prices, it's one thing, it would not be appropriate for the Fed to act. So, a couple different factors for us to take a look at. So, of course, I'll keep you guys updated tomorrow. Like I had mentioned, we'll get the job opening and labor turnovers. Wednesday, we will get consumer price index along with just updates on the 10-year auction and how mortgage applications have been doing. They have been on the rise as interest rates have dropped. We have been slammed with number of applications taken, which again is a good thing, kind of showing you consumers are obviously warming up into the spring and summer. And then, of course, producer price index. What's the cost of things and how are they obviously translating back to the consumer? So, of course, if you guys have any questions whatsoever, please make sure you guys reach out to us at gotmortgages.com. Talk to you guys soon.